Hello and welcome to Wall Street Wisdom. If you're serious about building wealth, navigating the stock market, and making smart investments, you're in the right place. Today, we're diving deep into a massive financial shift happening right now, the ongoing economic battle between China and the USA. This is more than just a political rivalry. This affects your investments, your portfolio, and even your financial future. We're going to break it all down. How this new economic war is shaking the global stock market. Which stocks could be the biggest winners and losers. How tariffs, sanctions, and trade restrictions are reshaping industries. And most importantly, how you can position yourself to profit from these shifts. Markets are moving fast, and investors who understand these dynamics will have the upper hand. So grab a seat, stay focused, and let's get into it. Now let's start by looking at why this economic war is heating up again. For the past decade, the USA and China have been locked in a strategic competition, battling for dominance in trade, technology, and finance. It started with trade tariffs back in 2018, but things have escalated. Supply chains are shifting, tech companies are under pressure, and major corporations are forced to rethink their global strategies. One of the biggest areas of conflict, technology and AI. The US has imposed strict restrictions on semiconductors, banning China from accessing advanced chips from companies like NVIDIA, AMD, and Intel. Why? Because whoever dominates AI will dominate the economy of the future. China, on the other hand, is doubling down on self-sufficiency, investing billions into its own AI sector, semiconductor manufacturing, and renewable energy projects. This means two things: massive volatility in tech stocks as companies navigate these restrictions. Huge opportunities for investors who position themselves correctly. Now, what does this mean for your portfolio? Let's talk about stocks that are at risk. First, companies that rely heavily on China's supply chains could take a hit. Think about major brands like Apple, Tesla, and Nike. They manufacture large portions of their products in China. If trade restrictions tighten, these companies could face higher costs, supply delays, or even bans on selling in China. Then there's big tech. While giants like Microsoft, Google, and Amazon are thriving in AI, they're also facing pressure. If China starts retaliating with its own bans or antitrust investigations, we could see massive stock swings in these names. But it's not all bad news. Some companies stand to benefit from this conflict. Chipmakers outside China like Taiwan's Semiconductor, ASML, and Broadcom could see increased demand as the US moves its semiconductor production away from China. Defense stocks like Lockheed Martin and Northrop Grumman could get a boost as the US increases military spending to counter China's growing influence. And then there's commodities. With China ramping up infrastructure spending, demand for copper, lithium, and rare earth metals is soaring, huge for mining stocks like BP, Freeport-McMoRan, and Albemarle. So how should you invest wisely in this environment? First, diversification is key. If your portfolio is too concentrated in US tech stocks, you might want to balance it with global investments, commodities, and defensive sectors. Second, watch for policy changes. The markets react instantly to trade policies, new tariffs, and government announcements. Keeping up with global news can help you make informed buy and sell decisions. Third, don't panic sell during market dips. This type of volatility creates opportunities. If a great company dips because of short-term fear, that's when smart investors buy the dip. And lastly, long-term investing always wins. While short-term traders might get caught in market swings, those who hold strong companies for years will likely see massive returns. So, what do you think? Is this economic war just starting, or will we see cooler heads prevail? Let me know your thoughts in the comments. If you found this video helpful, make sure to like and subscribe to Wall Street Wisdom. We drop high-value investing insights every week to help you stay ahead of the markets and build long-term wealth. Hit that notification bell so you never miss an update. And as always, stay smart, stay invested, and I'll see you in the next one.